All right, well, here we go, ladies and fellas. Another day of the stock market going to be opening pretty darn soon. We'll see if it is open by the time that you see this video. I want to talk a little bit about the stock market and also talk about crypto market, especially in light of the catalyst that we have coming up over the next several weeks. We actually have a pretty darn important time coming up in terms of the economic reports that we have, the labor market reports this week, the Trump tariff stuff that's going to continue to develop. June 5th and June 9th, the two big dates that we're looking at. And then we also have the inflation reports that follow CPI, PPI, and that rolls right into the Fed meeting after that. If you haven't watched my video from yesterday, you absolutely should. By the way, my analyses, my technicals, my buys and sells are available over at the Discord. There's a link down in the description. We'll talk about it later. In the meantime, I do want to get into the charts, and we'll kick things off with the Qs, and then I want to get into SPY, IWM, and then we'll also cover Bitcoin, Ethereum, XRP, SUI, and I think Solana I have up on the list here for you. So let's jump right into it. So moving into the Qs, there we go. What am I looking at when it comes to QQQ? There we go. So here's what I'm seeing. The 20-day is up here above the 200, bullish. The price action above the 20-day, 250, all bullish. The 50 we need to get to cross the 200. We'll see if we get that. The market, pre-market's down a little bit. I expected to be a little bit worried this week. I took out some short hedge positions, and then I also have that some long positions out there as well that I think could do extremely well for me. Hopefully, I'm able to benefit on both sides of that, as not everything's going to move together all the time, but we'll see. Those short hedges out there, just in case we experience that weakness, should save me a little bit of cash. So the 20-day, watch for that for support. If we do happen to sell down the 200 down below that, I think would have a lot of opportunity. What are the moving averages telling me? Well, generally speaking, we're in bullish territory being up above the 200. The 50 above the 200 would be even better. We need to see what we get over the next several days. When we look at the SPY, we have pretty much the same setup that we had with the Qs, that we have the 20 over the 200-day. Price action's above both of those. It's also above the 50, but the 50 is not over the 200 yet. That's really what we're looking for, that big golden cross moment where we have that bullishness, and we should be seeing prices move on to all-time highs if that does happen, or moving near those all-time highs, which is about 611 for SPY. And if we go back to the Qs just for a moment to talk about that in the same context, that's about 540 is what we're looking at to get up there. And potentially if we get that golden cross, the fact that the 50 is positively sloped, so is the 20 and the 200. These are all very good signs that we see. The RSI, whether we're talking NASDAQ 100, S&P 500, or Russell 2000 stocks, each of those index RSIs, the momentum is in bullish territory, although it might be subdued a little bit more from what it was, but cooling is actually what we want to see. These long wicks off the bottom are excellent signs of buying pressure that we're having come in, and we're kind of in a mixed position right now, like I said, with all those catalysts coming up, because even though there are those catalysts, they're not necessarily bullish or bearish catalysts that we have coming, but there are catalysts. They will move the markets depending on what we hear from that. And then don't forget that the Fed has the Summer of Economic Projections coming out. I believe it's the 18th. It's in that week, either 18th or 19th of June is when we have that. I could check it, but that's not really the point of this video. But when the Fed meeting does conclude, and it's usually concluding on a Wednesday, that's when we get the next Summer of Economic Projections, where the Fed puts out what they think for GDP, what they think for inflation, what they think for unemployment. And so we'll see it. It should speak volumes about what they think the state of the economy is going to look like between now and the end of 2025, and then also 26 and 27 as well. And so I'll give more commentary on that in another video, because it's absolutely worth looking at. So let's move over into IWM. So IWM, the 20 is up above the 50. That's a near-term good sign, but still overall we're in bearish territory until we get back up over that 200. The RSI is declining, but it is still in bullish territory. If I put the technicals up for a moment, we could potentially have an inverse head and shoulders, but I think that easy monetary policy really has to come our way before we start to see that movement to the upside. So that's really something that I'm watching for IWM. So if I take those down for a quick moment and we keep looking at this, we are pretty much at this blue 20-day moving average, which could be good support for us. That's a reversion to the mean. Good. We'll see if it holds for us. If we get significant market weakness, then we got to look for the 50. If we get market strength, maybe we'll finally break and sit on top of 210, allowing us to get up to that 200 at about 215, which, being flat like it is, could be solid resistance for us. But if we get enough movement to get up there, we'll probably break through it, but it depends. So to get more into crypto, which is more the point of this, looking at Bitcoin, and again, I think the moving averages are important to pay attention to. The RSI is just coming down on 50, so we're really getting that bullish slash bearish territory. Where exactly do we go? Well, if this is starting to form a small bear flag on us on this daily chart, with the 20-day that we've now lost as support and now it's turned into resistance on us, we could sell down to the 50-day on this one, and that currently sits just below 100,000 per BTC. And if I put the lines up here for a moment, there's a really important one right at 104,324. Currently, we've lost, even though we found it as support, the previous 2 days, Saturday and Sunday, and today's not over yet. This candle's still developing. Crypto never sleeps. We have lost this race so far going along here, but again, it's still not totally lost until we see where today shapes up. 104,324 again is that number. Down below that is 98,451, and so that would almost coincides. It's just south. That support is just south of where we find the 50-day. We do have the 20 over the 50 over the 200, so we're still overall in bullish territory for Bitcoin. And honestly, when we look at the momentum for a weekly basis and a monthly basis, we do want to see a little bit more cooling so we can get that next rise moving in there. I think the first little bit of June that we have could really tell the story for the rest of June. I still think that there's a possibility, there's a potential for new all-time highs, not only in the stock market with what we see for the NASDAQ 100 and the S&P 500, but we could also see a strong return for the Russell 2000 stocks. And certainly crypto is no exception to that. If we find ourselves in a high liquidity situation, if we find ourselves with easier monetary policies suspected to be coming our way, the market's going to be sniffing that out and it's going to go bonkers. If instead we're seeing signs of economic weakness, if we go more risk off, Bitcoin might do a little bit okay. We saw it kind of go a little bit better than what we saw through the rest of the market. It didn't go all the way down to like 20, 30,000 during this this last dip that we had. Instead, it went down to about 75,000-ish. You know, it might actually start to be seen as that, or continue to be seen, and maybe even more so as that that hedge against inflation, for example, if rampant inflation is expected, or maybe there's that significant economic weakness or something, or maybe it's more like dollar fears or something like that. Could be things that we're looking at for Bitcoin. So lost the 20, we're still above the 50 and the 200. This is still a very bullish structure that we have going on, and a cooling in momentum isn't necessarily a bad thing, especially if we retest the 200-day and find that as support for us. That could set up that next big opportunity. For ETH, man, ETH lost his 20-day as well, looking a little bit like Bitcoin in terms of how it lost his 20-day. Could not overtake the 200. The 200 went flat on us after being negatively sloped, and now it's kind of declining again. If we put up the EMAs for just a moment, you can see the rejection that we're getting today off the 5 and the 13. This light blue line coming across here is the 200 EMA, and if we lose that, that could probably be pretty significant for us. We got the 50 EMA down below that, around 2,300. But if I put the technicals up here for a moment, you can see we have a pretty fat area of support, which also includes that blue EMA that's in here. And if we put up the simple moving averages and take down the exponential ones, we have a while before we get all the way down to that 50. But that support area, if that holds for us, that could be a very good thing. And like I said, the economic reports that we get are going to play a big part in that. Moving over to XRP, if I put up the simple moving averages, we actually lost the 200-day, we lost the 20-day, we lost the 50, all according to the simple moving averages. The 20 about crossing over the 200 is a bit of a bearish sign for us. If we put up the EMAs, we're actually dangling off the 5 still. This is, once again, near-term bearishness. If you want to see near-term bullishness, watch for the candles to go back up above that 5-period exponential moving average, that green line coming across your screen. That's really going to show you in the near term what the price action is doing. If we continue to get rejected off of it, then we can continue to sell down from there. If we move over to SUI, man, that's a mess to look at. Let's take that down for a moment and look at the moving averages. We just got rejected off the 50 yesterday. We closed just below it, and then we also are currently getting rejected off that 50 as well. Still down below the 200. If we can get back on top of it, we might just see that golden cross. If the 20 instead crosses down over the 200, it might be a false signal, and then we don't necessarily get that bullishness. The RSI currently down below 50. And then if we move over to our friend Solana, which I'm not sure why that came up, but if we move over to our friend Solana, also getting rejected off the 50, the 20 also going negatively sloped, and we got rejected off the 200 as well. So guys, if I were to give an overall take of where we're at for the markets and where we're at for our stock market, crypto market, as I've talked about in this video, it does look like there's a lot of uncertainty going on, and the market is certainly experiencing some of that weakness in the face of uncertainty. Not necessarily an overall bad time, I would say, just an uncertain time. And as we get those reports this week, that should provide some clarification to find out if the uncertainty and the fears are warranted and we sell on further, or if it's a situation where we find out that, hey, the reports are still saying, don't be afraid yet, you guys are still good. And really what we're looking for is how is it signaling the current state of the economy and how is the Fed going to interpret it. That's a bit of the game that I see that we're playing. And guys, like I said, I will share my analyses over at the Discord as well. Be a little bit more articulate over there with the things that I have to write. I interact with the thousands of community members that are over there. I'm one of the panel experts. There's a whole team of us supporting that community towards financial freedom and building alpha in their portfolio and also financial education. And there's also tools over there like the bread bot that can tell you when major moves are coming up or down. There's the AI charting tools. There's the advanced charting tools that are over there. There's live trading that also takes place. There's a place where you can go and ask the experts directly, and we can answer your questions to the best of our ability, and we're pretty darn able. And then, guys, link in the description. Sign up for the earner tier. Use the code word DOCTOR when you do so, DOCTOR. That's going to save you 50% off your first month's sign up. And then after that, you guys can decide if you want to hang around. I think you can find that you like what you see, and you probably end up staying for quite a long time. And then there's also a learner tier over there as well. But for the cost difference with that 50%, I would honestly go for the earner tier. It's going to get you unrestricted access. If you want to learn about trading options like I do, I mentioned about my long positions and my short hedge positions and my trading account. I do options for that trading account to work towards that alpha, to build that alpha, and I use that towards my long-term positions to build out my actual long-term investments. There's an options course. There's also a trading course for technical analysis, which also includes the bread recipe. Guys, that coursework is through Stockmo Academy. Stockmo is a personal friend of mine. It's how I ended up joining the Discord in the first place, and I'm glad that I did, and I think that you guys will be too. But with that coursework through Stockmo Academy, code word DOCTOR is going to work with that as well for saving you a ton of cash. It's a one-time purchase for the courses, and then they're yours for forever. So that code word DOCTOR does function a little bit differently, but how it does work the same is it saves you, like I said, a ton of cash. Bundling the course is going to save you even more cash for those. You guys can let me know what you think down in the comments for the technicals that I have here, for the analysis, the commentary. Like I said, I think it's a time to be cautious. I don't think it's a time to be overly bearish and set up a whole bunch of short positions for myself. I'm just not going to do that. I also don't think it's a time to be wildly bullish either, but I do think that depending on what we see being signaled to us for the technicals and from the economic reports and how we see the state of things, that could really set up that next big signal that we could put in those next plays and play those directions. And like I said, I do a lot of that directional play through options, coursework in the description. Go ahead and check it out. Code word DOCTOR is going to work for that. Or if you sign up for the Discord, you just want to join us and see the plays that we're doing, see the buys and sells, see the analyses, see the technicals, you guys name it. It's over there waiting for you. Code word DOCTOR is going to work either way. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.